One.
Good afternoon. My name is Sean McGuire. I'm the Executive Director of the Albany County Land Bank. It is 2:35 p.m. on Wednesday, January 14th, 2026. We're calling to order a meeting of the Land Bank's Executive Committee, and we're holding this meeting remotely per New York State Open Meetings Law. This meeting is available on the Land Bank's YouTube channel for listening and viewing. Today, participating on the call, we have the following board members: Sam Wells and Joe Seaman Graves. Absent from the meeting are Natisha Alexander and Charles Toohey. We have the entire Land Bank staff joining us today, save for Susan Baker, Sean McGuire. Sorry, I don't know why I'm frozen up here. Sean, Lillian, Lynette, Shelby, Jason are all here. I don't think I missed anybody, correct? All right. The agenda was circulated to the committee ahead of time and contains a number of items. The first is a review of the minutes. Those reflect the minutes of the last meeting of the committee, which was held in November. Hopefully, everyone has had a chance to review the meeting minutes from the last committee meeting. If there are any questions, suggestions, or amendments to the minutes as presented, if there are none, we would take a motion to approve and adopt those minutes to our records. It's a non-binding motion because we only have 2 out of 4 members here, so no quorum.
So moved. The minutes look good to me.
All right, moved by Sam,
Second.
second by Joe. All right, we'll just record that to our minutes and we'll bring those back next month for a full review and approval. Okay, we'll move on. Next item on the agenda should be our financial statements. Let me just switch my gears here. Those were set out ahead of time. I'm going to focus initially on the balance sheet highlights. I don't know if I should. I'm going to start out with the fact that I was wrong last month, and I'm glad to be wrong. This leading into it. Last month we went through and looked at the net revenue. We had an operating deficit, and the question was, where do I think we'll end up at the end of 2025? I said I think we'll probably close that gap to about $100,000 or so. Pleased to report on the bottom line, line 77, our net revenue as of 12/31/2025 was $159,394. So we did end in a positive position. So, but going back up to the top, working our way down, total assets on line 35 of about $5.6 million. Those include current assets of about $5.4 million shown on line 27. Our bank accounts shown on line 9 equate for about $4.1 million. Grant receivables on line 17, about $320,000. On line 25, our property inventory is about $994,000, and our fixed assets on line 34 at $149,000. Any questions on the assets off the balance sheet? All right, moving to liabilities here. Line 74 is the bottom line there. We had total liabilities at the end of the month of $513,000. That's exclusively current liabilities. That includes accounts payable on line 41 of $15,500 approximately. We have deferred grant revenue on line 67 of $309,000, and then a lease liability of $145,000 on line 63. Rounding out the end of December, we had total equity on line 78 of $5.1 million. We had total unrestricted assets on line 76 of $4.9 million, and total net revenue at the end of the year of $159,394. Good to be in a positive financial position, but moving forward, I expect that we'll be taking some of that equity, some of those unrestricted net assets, and investing those in our projects moving forward. I know the organization and the board has some ambitious goals, and we look forward to having the resources to allow us to get there and control costs along the way. Any questions on the balance sheet?
None
here.
All right, thanks everybody. Moving to our activity statement or our profit and loss on the next grouping of pages. This is the budget versus actual. Since it's the end of the year, I'll reflect back on the total budget versus actual to see where we're at. But we'll start on line 23, total revenue of $1.2 million versus a budget of $3.4 million. Variance there is about $2 million. The variance there is going to account for grant revenue that we were hoping to bring in last year, primarily tied to getting block by block or our Flip the Block project off the ground, but we're still working through that with the state, so that money didn't come in. Good news is that money also wasn't spent along the way. Moving to line 8, that's where you'll see that big grant income line didn't come to realization of $2.2 million for the budget, and we realized $954,000. On the property sale income line, we were hoping for more sales, but we were anticipating potentially some properties coming back in as time has passed since the change to state law. But as you know, Albany County did their first auction in December, but we look forward to working with them and their ongoing support to identify properties that are well suited for our mission within our communities around the county. But the budget for property sale income, we are at 583 and we are at 198 for that period. And then fee income, we had a budget of 20,000. We overperformed that to $24,000 on line 21. Again, our cost of goods sold, the big delta there is that we did not get Flip the Block started last year as we hoped. We had a total budget for 647,000, almost 648, versus a budget of about 2.5 million on line 64. Our demolitions also on line 43, we expected to have to do more of those, but we're able to keep that in control, and some of that demolition work will come in 2026 here as we use some of our LBI resources to accomplish that. But we're at 216,000 in demolition costs on our properties. Property maintenance, pleased to report that we're actually under budget on that. On line 46, we had planned for 225,000 and we ended up at 201,387. So we have about $24,000 in property maintenance savings. Gross profit for the year, we're hoping again with the Flip the Block project to have line 65 around 956,000, but we ended up at 643,000. Total expenditures on line 109, we had budgeted 956,000. We ended up at 812,000 for the year. The salaries, we saw savings about the neighborhood of 40,000 on line 68. We were at 468 for the year on the budget. We at the end of the year ended at 428. And then in professional services, line 87, we budgeted 227,000. We only needed to use $149,000. So great work by the team in keeping all those costs under control. Net operating revenue on line 110, we initially expected to be at a loss of 168,000, but ended up on line 118 once you factor in other revenue and total net revenue here to 159,394. Overall, year-over-year comparison, 2025 versus 2024, and these are unaudited numbers I'm giving you. We're starting the audit. We're actually have started the audit process with the auditors. We're getting them backup documents, but just on our unaudited statements, total revenue on page 6 of your packets on line 26, we had total revenue of 1.2 million this year versus 1.7 million last year. It's a decrease of about 24%, almost 25%. But our cost of goods sold was significantly decreased. We had 1.5 million, almost 1.6 million in 2024. This year at 647,000 in total cost of goods sold. And then net revenue for this year, I'm very pleased to say that last year we had a loss of $653,000 last year. And then this year, because of the outstanding work by everybody who's involved, we were able to turn that around significantly and had net revenue of $159,000 for the year. So I'm quite pleased with how everything turned out. And last month that first number came out at the end of November versus where I knew we were going into December. I wasn't terribly concerned, but I think that was even a surprise to me that we were that far back, but we knew where the money was coming in, and just this just all panned out as exactly how I was hoping for, and we're pleased to move into 2026 in a strong position. And I think that we'll be talking more about how we reinvest what we've been able to realize from projects back into the community. I think it's not expectation that the land bank is operating at a profit every year. I think that it's good to have good years. It always allows us to invest back into the community and put those resources back where they belong. So that's what I've got for the financial statements. Any questions on those?
Yeah, Sean, was there first of all, awesome job to the team for coming in with the net revenue this year. Is there any pending whether it's I know we didn't have any major sales, but any pending revenue that was not accounted for in 25 that'll hit, first quarter 26?
I can go through. I know we do have sales that are still due to come in that we've been working through that aren't closing. Give you an example, the board approved the sale of 202 Kent Street last year. And so that closing is happening on Friday. 157 Homestead, that was approved last year. That closing is moving along, but we don't have a date yet. That last year's revenue, also accounts for, we got that closing down for the South End project, and we're able to also realize we were expecting part of the development fee to come in 26. We didn't need to show it on the books. In fact, it would have been almost a break even had that not come in. And then we got that in 2025, mostly due to they had the money and something in the paperwork suggests that it was flowing to us in December, not in January, and so they had to flow it to us sooner. So, but in terms of overall ones, we do have two more properties also on Second Avenue. Lynette, sorry, that was what address on Second Avenue? 34 and 40. We have sale pending on those. And then we still have, but that's not going to generate revenue, because we property going to the city of Waterville so they can advance some housing on their own.
All right, not major dollars, but might have something trickling in to start the year.
No, we're not going to get hit with a big thing. What ends up happening, if you remember, each year that we start the year, we start to look like we're spending down. That's why the cash is important to us, is to be able to have adequate cash flow, because we have to be able to, pay the bills on the work that we're doing. So all that money that sits there really just allows us to pay people on time, allows us to be able to advance projects faster because we don't have to wait for a reimbursement to come back from the state. There are some organizations and entities that when they've got grant funding have to wait for something to come in to backfill and backstop what they're doing, and not us. We just keep going. That speaks to why we had such an operating deficit at the end of November versus December. We didn't have to wait. We could keep working along as we had the resources to manage cash flow.
Sean, question again, this is very minor.
Yeah.
Minor amounts, but on the profit and loss line 25, the donation income. I always find that just interesting that, even though we don't really ever solicit donations of any kind, they still come in, every year, even at a small amount as what's listed on there.
Mhm.
Just from your experience, where does that come in from? Who, what reason? Just in general, to summarize. I remember previous years it was folks who were just appreciative of the mission and
Mhm.
may have purchased property from us in the past and wanted to, sort of give it forward kind of thing. Is that still the case, or?
Let me go back and look and see. I don't know the connection to our donor, and I don't want to. I don't know if they're looking for public acknowledgement, so I'll hold back on a name. I also don't know it at the moment either, so I have to go back and look. But I can see if there's a connection. One of the things that I have done, for the land bank, is to work with Candid, which is a verification platform for nonprofits. You'll see at the bottom of our webpage that we have a little bug on there that talks about our overall transparency. So we had a platinum transparency rating for 2025 with Candid. I can't remember who they were before they were Candid, but it's like, and then I think they're GuideStar, those types of organizations. But one of the advantages of that is that people that are maybe in a donor advised fund, or looking to, offset some tax exposure. That's a resource that they can pull in to identify organizations that may, fit some of their personal values or goals, and they can then direct those resources accordingly. And that's something I brought in from my experience with other nonprofits, where I've just gotten donations I never solicited, and they came in and they come in that way, is because we're listed in those directories. And it's a really simple thing to do. It doesn't take us much time, but it does end up showing up in that system, so donors can find us even if we're not actively soliciting them.
Awesome. Thank you.
Yeah, no, thank you. All right, we'll move on to new business. If you, I'm going to update this for the next month just to be a little bit more of a report from me as to what's going on. But we are in the process of preparing the annual report for 2025. Just started talking about that today. Part of that will be updating our 2025 key performance indicators, and then starting to track those again for 2026. We do have 2 standard reports on our website that don't fall into, the glossy annual report. That's our statement of accomplishments and our the analysis of our indicators. And so we'll do that. I don't see any changes there. I know that we're going to talk more. We've been talking more about some additional KPIs to start tracking. We have a pin in that right now because we're moving off of the eProperty platform and into our Monday work management platform. And so we're working with a developer for some customization there. And so as we get through that, we'll be able to build out our KPI dashboards based on the things that we've discussed over the past couple of months. And so that's just it's still baking behind the scenes, but nothing big to report on that. And then in the retreat update, we are, working through that still. We believe we have a facilitator that we'd like to work with. We're just wrapping up some other elements along the way, and making sure that, we're making sure the legislature gets everybody reappointed so that we know we're working with, a fully appointed board. And we do have Michelle, who's the newest board member that was appointed last month. So just letting that settle out. We wanted to get that done before the annual meeting in March, and if we can, we will. But out of respect to everybody's, schedules, we do need to have enough lead time to be able to facilitate that. The retreat, I think, is important because, things that we've been carrying forward is pretty much just carrying forward committee structures and members, and with the change in committees last year and the bylaws, I think it's a good time to us to revisit those and ask how we what's the minimum, what do board members expect from each other in terms of participation on our different committees. And because I know the executive committee, you're very much involved, I appreciate that, but we'd like to draw in some others too and make sure that we have the committees. They have to be a minimum of 3. I would not suggest we ever go more than 4, because then we create a board quorum issue along the way. So we'll need to take a look at those pieces. But just want to leave that if you had anything top of mind on those. Otherwise, I'm happy to go through some other updates of things that we are working on internally. None of those are privileged pieces of information, so no need for executive session today. All right, I'll move down my list here. On the human resources side, I think it's about time we do a full review and update to our handbook. I think the last time that was really done, we did a technical update in 2024 to a calculation on paid time off. And so we should go through that up, top to bottom. Some of the things that, stand out, right away to us. Not that there's any problems with the policy, with the handbook itself, but we have a telecommuting policy that's rather brief, and I'd like to update that to be more. I don't think it's transparent's not the right word, but I think that the team needs to there needs to be less ambiguity, I guess, in the telecommuting policy, and what that means. So we just would like to update that. I know last year we talked about PTO. We don't allow for a payout of PTO when somebody leaves, but we have really a dedicated group here, and when they earn time off, because we're working on a lot of things at the same time, even though we encourage people to take the time, I think we just get, caught up in what we're trying to advance. And so that might be, left on the table at times. And I think the message I got last year was we should maybe revisit that to be a little bit more contemporary in terms of the time that people earn and making sure that they're compensated fairly even when they leave for the time that they've worked. The other things, we've had a simple IRA for our retirement benefits since I think the Land Bank was established. That is a great tool for a very small business. But after 10 years and a bigger team here, I think it's worth taking a look at, a 401k as an option. That we have to understand the costs that go into that. But in terms of, if you think about some of the things that we try to advance, on our own goals within the community, home ownership and good financial management. There's some limitations that exist in a simple IRA versus a 401k. For our younger professionals that are on staff, they go to look to buy their first home and they need to maybe, borrow a little bit to make the down payments work, or that they can't use their simple IRA to do that. You can't borrow against it, but you can in a 401k. So there are nuances there that come into play. The other piece that we should look at that's not inside the handbook, but we do know we have about a 20% increase to our health insurance coming up in May. We've already seen what those rates are, and so we have to plan and account for that. And in addition to the rates going up, they're changing the high deductible plan. The limits are going up by about $500 on single and family, and so that potentially has the impact of trickling into our individual HSA contributions, because the Land Bank contributes half of that to the employees to offset the high deductible cost that keeps the cost of the plan to the Land Bank lower. But one of the ways that we can do that, because we're a small organization, we fall into the small group community ratings and pricing. But we can look at professional employment organizations, PEOs, that use, I don't know if you're familiar with those, but it's a co-employment model where you're employed by the Land Bank for the work you do, but then you also have an employment status with the professional employment organization. And we could use somebody like Paychex as an example. Paychex does professional employment organizations. And what they do is they co-employ the employee for the purposes of HR. And so there's no relationship in terms of work performance that exists there. Just that PEO model allows the professional employment organization to be the employer for the purposes of things like benefits, for HR support to the organization, during hiring and separations. So we're evaluating that. There's cost that goes with a PEO, but there's also potential for savings that comes along from the PEO being able to negotiate health insurance rates and not being subject to what exists out there in the community pricing models. So needless to say, there's a lot that's baking around in the process here. Go ahead.
Sorry.
Yeah.
With the health insurance, I'm currently dealing with that on my end with my company as well. I'd be interested any information you have to share with the board on this and how it's impacting impacting the employees. I'm sure you're handling it the best you can, and I'm leaving it in your hands, but I'd like to just kind of understand it a little better because as I educate myself on my end here with what's happening with the company I'm working for as well.
Yeah, from a high level, Joe, the impact, the employees that are taking single coverage, the impact that comes to them in the new year that starts May 1st for the plan is an increase in the deductible by $500. And if we offset that as we have in the past, they're really looking at a $250 increase. They've created a different plan that tries to balance some of that out, but it comes with other changes. And so one of the big things I noticed there is that in the other plan, premiums increase for the employer, but the deductible stays the same as it was. But then, if you look further down the rate sheet, if you have to go in hospital, if you're an inpatient stay, you go from a $500 copay to a $1,500 copay. So they all get the numbers at the end. It all comes out in the end. It's really the format of where those numbers are. I think that we probably won't suggest making any plans. And with the state, there's been rate increases pretty much across the board to all the employers. So even moving from like a CDPHP to an MVP or to an Anthem, they're all really close to each other, and there's probably not much gained by anybody by making changes. It probably might be a little bit more of a frustration to the team who's used to CDPHP and what they provide and their services, and now we would switch them up to something else. So, but I'll let you know more as I get into it for sure.
Yeah, I'm interested. Thank you.
Yeah.
Sean, just a
yes,
question on the retirement piece. Forgive me that I'm not well versed in this area, but are land banks able to opt into the New York State retirement system like a lot of transit agencies and municipalities?
No, we're not. And the rationale behind that is land banks are created under nonprofit corporation law. And so while they are public authorities under state law for how they're created by the county legislature, because they're created by the county legislature, they become public authorities. But because they're created in nonprofit corporation law, they're viewed by, I believe it's the comptroller's office that makes this determination. They're viewed by the comptroller's office as a nonprofit first and a public authority second. And because they're a nonprofit first, we're not eligible for participation in the state retirement system.
Wow. Okay.
Yeah.
Thank you.
I think that there's probably land banks around the state that would like to see that different, but it also comes with a cost to it as well. And that matters to land banks that employ employees directly. So where what land bank is? There's other land. Some of the land banks that are they're established, but then they have an operating agreement with with a municipality. Maybe the planning department operates the land bank on behalf of the foreclosing governmental unit that established the land bank. Well, because they're employees of the municipality, they're in the state retirement system, they get to participate. So it's just a matter of how the employment situation is established. So
Interesting. Thank you.
yeah. A little frustrating on my part because I've lots of years in, but that's all right. I'm here for the work, not the retirement benefits. On the insurance side, give you a little bit of an update. We went through that in November. Inevitably, we get somebody that wants to audit our insurance every year, and so we did a workers' comp audit. There's a potential increase in premium there, but we did meet with our broker to talk about that and how to respond to it. In a nutshell, our insurance company, The Hartford, takes a look at our employment makeup and the work that we do. And even though we say that our staff are executive office staff, the minute that anybody goes out to look at a property, they have classified that as an inspector role and have assessed us for the cost of somebody doing that job, even if you just showed up, once during the year, there was enough risk and exposure that they justify changing the classification of the position. We're going to take a look at job descriptions and just practically how the office works, and we're already disputing that with the Hartford to try to reduce. We probably will get some sort of increase, but looking to reduce it. The increase is, I believe, Lynette, if you're able to unmute, it's not more than $5,000, right? So we're really trying to just, if everybody went out us and said they would have another $5,000, it'd be problematic. So I think we just want to make sure that we're getting the right rate and the right premiums based on the work we actually do. All right. My next update for you after that, we have been looking at, and it's 3:05, so we got a little bit of time. We got about 10 minutes. One of the things that takes up a significant amount of time, and until you start doing it, I think you don't really believe it, but it does. It's just the getting ready for these committee meetings, getting ready for the board meetings. So that's why when we have to reschedule, it throws things off a little bit. What we've seen over the past year is that if we have some updated information, we email that out. It might get missed, and so you all might be not looking at the same updated information, and then we're shooting emails out during the meeting to update that. We're looking at different board portals or applications to help manage the board and all the information and the communication, so that way you're not having to comb through your emails to find out what's happening. If you got onto this meeting, you do is log into the board portal, and you can have all your materials right there in front of you. And those are up to date, not having to look through different versions of something. If we did have to update a document between when we sent things out last week and then when we got to the meeting today. So we're looking at that. There's efficiencies to be achieved by the staff and the time, to administer all of that. But we think that from a board member's perspective, as long as board members are, comfortable with using the internet, you should have a better experience being able to access the information that exists for that board meeting. And then also look backwards too. I found that when I was a school board member, I found it extremely helpful if I had a question about something that happened a couple of meetings ago, it was a lot easier to go into the school board portal, similar to these other, what we're looking at or others, and find that information so I could refresh my memory. And I found that very helpful. So we're going to bring that forward for probably implementation early this year. Shelby's working with the vendor we'd like to select. We've evaluated a few. I evaluated a few last year, or maybe it was 2024, but I had evaluated a few, and I did not find somebody that worked well. We met with a couple of more recently, and I think that all of us, Shelby, Lynette, and myself, think that one in particular is a really strong platform. And so we're going to start a 30-day trial to start seeing how that works. If you're curious, I'll have to see if we can extend like an invitation for you to see how it works, to get your feedback. And if so, we'll reach out to you about that.
Does the platform also serve as a backstop for reporting requirements? Will they be a repository for data and I don't know if push things to our website is the right term, or at least save it for in case we get audited?
I don't know. It's just because I think we have to get into it a little bit more. We didn't ask a lot of that because we have a pretty well-established process for getting materials posted to our website. It hasn't been an issue. I think we've cleaned up and improved some of that. But Shelby, can you unmute, and do you know the answer to that? Or?
Yeah, so the one that that I think we all enjoyed based off of the demo, it doesn't have a public site compared to others, but it does allow you to go back into prior meetings and see the notes. And also, so in your case, I'll be able to send out papers that need to be signed through that portal as well. So it's great for general organization, but in terms of internal, I think we have to look into that a bit more, just because now we're getting into the nitty-gritty of it being personalized for us and what we need it for. So we kind of saw the demo for a more generalized nonprofit, but once we start actually implementing it and putting it together, then we'll be able to see what that looks like a bit better.
Shelby, the one we're going to work with is Ideals, right?
Yeah.
Ideals board, and so I can share a link out to what that is, so you can see some of the stuff they put on the website. But we haven't run into that. And it could be a backstop. The one thing about all these things though is that like once you discontinue using it, you're gonna have to get the data out of it and park
Right.
it somewhere. So we've still relied on SharePoint to be our, our parking lot for everything and anything.
And
Like
I'm
it's
curious, Sean,
Yeah.
does SharePoint, because I'm more familiar with SharePoint, uh, what's the benefit of going with a third-party vendor as compared to just giving board access to certain, SharePoint folders?
Easier administration of it, and the isolation of not exposing our SharePoint outside of the organization, outside of the employees.
Got it. Okay.
Yeah, yeah. I've been hesitant on that because, it's going to require an increase in administrative costs with our managed service provider to make sure that we're keeping everything secure. In this case, this ideals board, and I'm not going to remember all of the different standards that they meet for governance and compliance, but they do have certain certifications in place about data protection, and that does exist with SharePoint, but some of that protection of data, they're and I could read this all, but it could mean nothing to you, but they're ISO, SOC 2, SOC 3, HIPAA compliant, GDPR, all these different security standards, and SharePoint beats certainly some of those standards, but the implementation of that can sometimes expose or create a vulnerability, and so we're just trying not to introduce that as well.
Sure. Well, I'm happy to move away from email updates, so whatever works.
Okay, well, it's idealsboard.com. I'll try to remember to send an email out, but I think
I'll send out an email. I don't mind
Okay.
sending out an email. So Joe, I just wanted to mention, what's cool about Ideal as well is that it helps track quorum. So we'll be able to have a good idea on who will be able to attend the meetings. And then everyone else on the board as well will be able to see what the quorum is looking like as well. So that's like another feature that we were excited about.
I was just hopeful with our new board member we wouldn't have to track that anymore, but fingers crossed.
well, I've always appreciated the
No, I like that.
members of the board that that have reached out. I know Sam has done that last year a couple of times, and I appreciate it to say, hey, I have something this night. If you need me, I can make it. But if not, if I could attend to this, that'd be great. In some ways, if something came up for Sam or anybody the last second, you could log in and be like, okay, 6 people are going to be there, and I haven't yet logged in, so I'm going to let them know I can't make it, and I think everybody's going to be okay. So
it's a great use of the software, and it's shouldn't be up to Shelby to track everyone down every month. So I'm all for it.
Yeah, I think Shelby's in favor of that too. She does a great job, but I think she's okay with letting people manage that themselves. And then the last 2 pieces I'll give you an update on, and then we'll be at our time. Our annual report, we printed that last year. I think we're just going to stick to a digital report this year. I asked after we sent that out if we've got any phone calls or questions or comments about it, and no. So I think we're going to do that by email. We're going to design it so that way if we needed to print some, we could send them to like a Staples to get as a short run of a 16-page annual report. But I think for the most part, we're going to dispense with printing that. I'm on the board at Discover Albany. We dispensed with the printing of all those digital reports or the annual reports because we throw out a lot more of those reports every year than we probably really should have to. And so we're gonna fix that. We can still get a mailing out to people to let them know the report's out there and put a QR code in, but I don't necessarily know that the physical report is something anybody's really clamoring after every year. And then moving into 2026, one of my goals is a regular review of our various policies. I've already started a policy review on acquisition and disposition. I was hoping to wrap that up for this board meeting, but I think I'll have that ready for you in February. Then that's potentially with one more other in there. So just stay tuned for that. I look forward to your feedback on those. And that's going to wrap it up. That's all I've got for the executive committee. Did you have anything for me that you want us to discuss now or bring up the next time we meet?
Nothing on my end.
All right. Thanks, everybody. So no more business before the executive committee. This committee will stand adjourned. Real estate will begin at 3:15 or momentarily. Thanks, everybody.